If you're new to investing and you want to learn how to start, you're in the right place because in today's video, I'm going to teach you number one, why you should be investing, number two, your best investment options as a beginner, and number three, the best apps and services that you should be using to level up your wealth. So let's start with the foundation. Why should you be investing in the first place? There are primarily three big reasons why you should be investing at least some of your income. The first reason is inflation, or the rate at which currencies like the dollar devalue themselves over time. The US dollar has inflated by about 2.5% per year over the last 30 years. So that means any dollars that you don't have invested will lose about 2.5% of their value each year. Inflation is also the reason why a Big Mac used to cost $1.60 in 1985, but today that same Big Mac would cost you $5.69. The second reason to invest is because investing will eventually grant you financial freedom. Most people are forced to work at their day job and trade away their time or energy when they would rather be doing something else, but obviously they can't because they have bills that they have to afford. If they instead have enough money invested, however, their investments would generate enough income to cover their bills and they could do what they want with their time. They would finally be financially free from their job. The third reason to invest is because the more wealth that you have, the greater an impact you can have on the rest of the world. For Mr. Beast, this is innovating YouTube, making chocolate ethically sourced with Feastables, and doing so much more. For Elon Musk, this is developing one of the world's most advanced AI with his company OpenAI. It is developing a neural interface for people with Neuralink, and it is getting a human colony on Mars with SpaceX. Each and every single one of us regular people have aspirations like these for the world, and it's through the vehicles of business and wealth and investing that we will actually be able to go and make these changes. And ultimately, I think it is these things that make our lives the most meaningful. Now that we understand why to invest, let's look at the best investment options for you, even if you are a total beginner. And I have to say it, this is not financial advice. This is just educational content that I've made derived from my own personal research. If this were personal financial advice tailored to your specific situation, then you would actually owe me about 1% of your portfolio per year because that is what certified financial advisors tend to charge. But to be honest, you probably don't even need a certified personal financial advisor as long as you're willing to learn and go do the research on your own. But that's just my opinion. With that out of the way, the best investment options for beginners today are stocks, real estate investment trusts, bonds, savings accounts, and commodities. Starting out with stocks, stock is just the equity or ownership of a business or multiple businesses. The word stock actually originates from the 1500s when people would pool together their resources or their stock, like food, weapons, ship materials, and money, to then fund a hopefully profitable voyage. And then when the ship would come back with its treasure, if it came back, the investors got cuts equivalent to their contributions. When you own a stock today, you literally own a very small portion of the business, and you make money when either the business makes money or the business's valuation grows. Most beginners who want to invest in stocks should stick to either low fee index funds or exchange traded funds called ETFs that track the S&P 500 or the total US market or the total global market. Stocks also have shorter names called tickers, and these specify the investment across various investing platforms. For example, the ticker VOO is Vanguard's S&P 500 ETF, and it generally tracks 500 of the largest companies in the US. VTI is Vanguard's total US market ETF, so investing in VTI means you're investing in America's big, medium, and small businesses altogether. And VT is Vanguard's total world stock ETF, so investing in VT means that you're investing in the entire world's biggest, medium, and smallest businesses. These are some of the best stock investments for beginners to start with because they have very strong track records of growth, they have very low expense ratios, and they are inherently diversified across at least 500 companies, which are spread across various industries. And it's also very easy to buy and sell fractional shares of these, which I will discuss more when we get to the platforms that you should be using. And if you didn't know, a share is just a unit of stock or business ownership. So if you own just one share and the business only has 10 shares total, then you would own 10% of that business. But it's important to note that most publicly traded companies that you will see tend to have thousands to millions of shares available. If you find any of this confusing or you just have questions, make sure to drop those in the comments section below, and I will make sure to answer those as best and as quickly as I possibly can. Beyond stock, we also have real estate investment trusts, also known as REITs. REITs are very similar to stocks, but instead of investing in businesses like Apple or Amazon, you're investing specifically in a company or multiple companies that own, operate, or finance income generating real estate. And legally, REITs must pay at least 90% of their taxable income to shareholders like you. REITs are essentially the best way to own real estate without having to buy or manage any real estate properties yourself. And it's a great idea to invest in both stocks and REITs because then you'll be more diversified and your portfolio will experience less volatility or changes in its valuation. Let's say that stocks aren't doing very good, but real estate is, then those two changes in the value will tend to even out. And the same is also true vice versa. So you want to be invested in both because you'll have much more stable and even growth over time. Generally, REITs will have slightly slower growth than stocks, but they may be more preferable for you because they usually have more stable growth and much higher dividends or payments to their shareholders. You should also know that technically REITs are just a very specific type of stock, so they are bought very much in the same way and they also have tickers. And the three REIT tickers that I recommend for beginners are VNQ, SCHH, and REET. VNQ and SCHH both invest in American real estate and have dividends of about 3 to 4%, but they are slightly different. VNQ, or the Vanguard REIT ETF, has a slightly higher 0.13 expense ratio, but people like to choose it over SCHH because it includes about 160 small, medium, and large REITs. SCHH, or the Schwab US REIT ETF, has a lower expense ratio of about half at 0.07%, but it's less diversified because it's only invested in about 100 REITs and all of them are large. And the third great option that I recommend is REET, the iShares Global REIT ETF, which invests globally in over 300 REITs across the US and other developed countries. So, depending on the level of diversification that you want between the sizes of REITs and whether they're in the US or globally, I would choose between those three. Or another great option and a smart strategy is to just take your REIT allocation part of your portfolio and then spread it across those three investments to play it safe. Our third solid investment option for beginners is bonds, which are basically just loans that you provide to a government or a business. And our fourth is a high yield savings account, or a savings account that pays you to keep your money in it. And I'm actually going to cover these two options together because they perform a very similar function within your portfolio as a beginner. The expected return of aggregate US bonds is about 3 to 5% today, and the return that you can expect from a good high yield savings account is also about 3 to 5%, so you'll likely get similar performance no matter which one you choose. However, where bonds and a high yield savings account differ is in their volatility and their protection against inflation. Savings accounts have no volatility at all, and you cannot lose money with them as long as your account and the amount are FDIC insured. Although there is the small risk that inflation would outpace your savings account interest payments, in which case you would not lose money on paper, but you would slightly lose real world value of your currency. Bonds inherently have more volatility than a savings account, and we do not like that volatility, but some bonds also have built in protections against inflation that high yield savings accounts don't offer. So, if you're new to investing, you're going to want to make a decision whether you want to include bonds in your portfolio and have a high yield savings account, or just stick to a high yield savings account without including bonds. From a purely theoretical and statistical perspective, you're probably better off including some bonds in your portfolio, but when it comes to real world application, you might actually be better off using only a high yield savings account for your short term money growth because that keeps things very simple and easy. At the end of the day, it's totally up to you how you want to manage your account and what your goals are. Now, if you decide that you do actually want to include bonds in your portfolio, I personally recommend something along the lines of HYG or TIP. HYG is a high yield corporate bond ETF by iShares that invests in riskier bonds known as junk bonds to get a higher return of like 5 plus percent, while TIP is the TIPS bond ETF by iShares that will protect you against inflation using Treasury inflation protected securities, aka TIPS. So investing in TIP is less risky than investing in the junk bonds of HYG, but you're probably going to get slightly less performance at a rate that matches inflation and then builds upon the inflation rate by probably 1 to 3%. So 1 to 3% would be your real world growth and value in that case. Most people should only invest in these bonds if they plan on using that money within the next few years, up to 5 years, or if they just want to increase the dividend payments and decrease the risk and volatility of their portfolio. But keep in mind that you will likely get a lower overall return compared to putting that same amount of money into more stocks or more REITs. As for high yield savings accounts, I recommend that every beginner use them because they are very simple and also very effective. All you have to do is keep money in the savings account, and then they will automatically grow the money in that account by a set rate that they will advertise. And like I said earlier, there is zero risk except for inflation, as long as your account and the amount are FDIC insured, which almost all of them are. And with a savings account, you're going to know exactly the rate that you're going to get. It's also important to note that the providers of these savings accounts can either raise or lower the rates that they're paying whenever they like. So make sure to keep an eye on your account and the rate to make sure that you are getting a fair deal compared to the competitors. But beyond those nuances, a high yield savings account is super safe, super awesome, and it's where you should be putting your money that you do not want in your checking and that you're not willing to put away for long term. And bonds are the other place you could potentially put your money if you're going to be using it in the next couple of years. But for most people, if you're going to be using the money in 5+ years, you want to stick with stocks and REITs. And all of this, of course, depends on your personal risk tolerance. If you're more conservative, you could put more money in the high yield savings or into bonds. Whereas if you're high risk, you could hypothetically put all of your money into stocks and REITs all the time to try to get the greatest return possible. I'm going to give you guys some great recommendations for apps and services for your high yield savings accounts later in the video. But for now, let's move into the last but not least investment option, which is commodities. Commodity is just a fancy term that means something that has use or value, and the only two that I recommend beginners consider are gold ETFs and or cryptocurrencies like Bitcoin if you're into them. There are other types of commodities available like agricultural products or oil or even Pokemon cards, but most beginners should actually avoid those because they highly encourage speculative investing where you're guessing how the price is going to move in the short term, and that is actually a really great way to lose a lot of money fast as a beginning investor. Gold is great for storing value long term, but it's actually pretty bad for growing the value of your account. So almost all beginners should avoid investing in it. But if you're going to anyway, I would recommend the gold ETF with the ticker GLD. Popular cryptocurrencies like Bitcoin, Ethereum, Solana, or many of the others could also make a very lucrative investment, but they're generally super volatile and high risk. So I would only put some of your portfolio into either the currencies themselves or custodial assets that represent them, which I will show you soon. When it comes to an automatically diversified cryptocurrency ETF, unfortunately, that does not really exist today. There is one, but it has a super high limit. And I know other people are actually working on making one. But since it doesn't exist today, what I would do is I would keep an eye out for news about that coming out. Or you could just do it manually on a monthly basis by having a certain percentage of your account dedicated to cryptocurrencies. And then you would readjust the allocation of each of those based on the market caps of those currencies, like, say, the top 10 most popular. And by the way, custodial assets are just things that a bank or brokerage owns on your behalf, and market caps are the total value of something. Like Bitcoin is the cryptocurrency that people of the market have assigned the most value to, so Bitcoin has the single largest market cap. Now that you understand all of the best investment options for beginners, let's get into the action and look at the apps and services that you can start using today to begin building your wealth. First off, online banking makes this all so much easier than traditional banking, so for online banking, I recommend Capital One. Second, budgeting is the best way to save and then have income to invest. So for budgeting, I recommend making a budget with Rocket Money, and then the app will tell you how good you're doing automatically if you connect it to an online banking service such as Capital One. And by the way, both of those are free and you can sign up with links found in the description. Beyond those, what I recommend for actual brokerage investing for beginners is Robinhood, and here's exactly why. With Robinhood, you can invest in every option that I mentioned and also way more, whether that be stocks, REITs, bonds, high yield savings, or commodities like gold or cryptocurrency, all for free with a very clean and engaging interface and the ability to build custom lists. And then for access for even more tools, you can upgrade to Robinhood Gold for $5 a month, like I have done for years, and you can get access to a high yield savings account that's currently at 4%, a very nice gold and heavy credit card that gives 3% back on all purchases, an IRA retirement account with a 3% match, $1,000 of margin for free with no interest, plus access to their automatically managed portfolios that are a part of the new Robinhood Strategies program, and more. Robinhood is, in my opinion, the best place for beginners to start learning the ropes. And honestly, you can do very, very well, even optimally, if they're the only brokerage you use for the rest of your life. Even today, Robinhood is the brokerage that I use the most because of its amazing AI, its tons of investment options, and really it's just all in oneness that it has between the IRA, the brokerage account, the high yield savings, and the credit card. Other apps and services that I recommend include Fidelity, which is admittedly less intuitive, but it's more serious appearing if you like that. And it's what I've used for my Roth IRA in the past. Or another great option I've used is M1 Finance, which is great for creating a portfolio that will automatically reallocate itself over time. Public and Vanguard also seem to be very good starting places for beginners, although I personally do not have much experience with them. And if you decide that you want to physically actually own your own cryptocurrencies, I always send beginners to Coinbase for that because it is an amazing place to start. You can find sign up links to all of these apps and services in the description, and some of those will help to support the channel. So I really, really appreciate you going out of your way and using those. Thank you for your time today. I hope you guys found this video valuable. I know that I did, and I actually really enjoyed making it for you. And if you enjoyed it, you will probably also enjoy one of these videos on screen too. So hopefully I will see you there. Have a great rest of your day.